Welcome to Renovate Ed, where we talk about all things home and renovation related. Hosted by Jennifer Goldsby, a renovation lending expert. Let's get renovated.
This episode is for contractors and remodelers. I run in those circles, network with a lot of contractors, remodelers, builders, and I'm hearing from my networks that a lot of the folks that are doing home renovation projects, they're working with cash customers, and business isn't bad. And I agree. Cash customers, that's gravy, right? It's easy business, reliable business. But relying only on cash customers, it's like fishing with a single bait. You catch one now and then, but you're limiting yourself to whatever bites. Whereas if you were to open up and work with homeowners who are leveraging their home equity to finance their home renovation projects, I could maybe compare that to casting a wider net, bringing you in more opportunities, ensuring a steady cash flow. I know things are good right now, and maybe those cash customers, they are aplenty. We're in that feast period, but if you've been around long enough, you know the feast and famine, and it's always a good idea to farm a little bit. Feasting's nice, but farming's not so bad either. So working with homeowners who are leveraging their home equity for renovation projects, it's planting relationships, it's nurturing them, and then you enjoy your steady harvest all year round, just diversifying your business. If I've caught your interest, and hopefully I have, we'll talk a little bit today about the benefits of working with customers who are leveraging their home equity using renovation mortgages to finance their home improvement projects. And I'll share with you some valuable insights on what you can expect, what that process looks and feels like, and how you can benefit. First, let's define a renovation loan, what it is and why it's significant. A renovation loan can be used for one of two reasons. Either you've got a home buyer who's looking to purchase a house that maybe isn't going to pass a home inspection or an appraisal, and they don't have cash to purchase this house. Well, they could use renovation financing to cover the purchase price and the repairs or home improvements that need to be made. On the flip side, maybe you've got a homeowner who already owns their home. Whether they own it free and clear or they have an existing mortgage makes no difference. We would refinance them and put them into a new first lien mortgage that gives them the money to pay off any debt if they've got a lien against the property and take out additional money to do their home renovations. These are first lien mortgages, one loan, one monthly payment. They're significant in this current market, primarily because we've been battling inflation for quite a while. People have been relying on their credit cards to get through day to day. They're having a hard time making ends meet. There's this widening gap between the haves and have-nots. Those who've got it cash, they've got a plenty, right? But there's this huge population of people out there whose homes are falling into disrepair or just need maintenance, or they want to do some upgrades and they just simply don't have the cash. They've been relying on credit cards. They've liquidated their savings. So why not tap into this huge population that is underserved? That's what I'm seeing. There is definitely a market for this kind of a customer. There are several different types of renovation loans that are available. We've got conventional renovation loans and FHA renovation loans and USDA renovation loans and VA renovation loans. Any combination of property project needs, we can find a loan to meet those needs. Let's spend a little bit of time talking about the benefits to you as the contractor. I'm hoping I can persuade you to come over to the other side. Work with clients who are obtaining financing. And part of the reason that I'm embarking on this journey is because I watch these homeowners struggle to find quality contractors. And they oftentimes are left with contractors who have no choice, right? They're maybe not the best quality, certainly not the most qualified. They struggle to produce licensing. Maybe they've got to go out and apply for their licensing. Their liability has lapsed or their workers' comp has lapsed. These are just the things that we're seeing, right? It's real difficult for a homeowner to get out there and find a quality contractor who's willing to take on a project that's being financed by a renovation loan. And I get it, guys. You got to jump through an extra couple of hoops. I totally understand, but I want to help the homeowner. My heart is bleeding for the homeowner out there who wants to hire somebody to do quality work on their home. They just don't have the cash to pay. Let's talk about benefits to you guys, the contractors. This allows you the opportunity to offer financing when a customer is unable to pay in cash, obviously, but it does it in such a way that there's no expense to you. I've heard from some contractors that they have consumer lines of credit that they've got access to. But those consumer lines of credit, they come with a price. Usually the contractors have to pay a percentage of their earnings to be able to extend that financing to the customer. Or they come with limitations. Maybe there's a limit on how much the homeowner can borrow, $50,000, $75,000. And there is a short window of repayment. Maybe those need to be repaid in 12 months, 18 months. And if you're taking out a $50,000 loan that needs to be paid back in 18 months, that's a really high payment. Whereas if they're using a renovation mortgage, whatever they're borrowing, it's amortized over a 30-year term. It makes it much more affordable. If they were reliant entirely on the consumer financing, they may have to limit themselves on what projects they could take on. But if they're able to roll it all into their mortgage, amortize it over 30 years, the monthly payment is far more affordable for them. Then maybe they can tackle more things. They've got other things on their punch list that they want to have done, and this enables them to do that. It reduces your reliance on builder lines of credit. I'm not going to say it's eliminating your reliance on your builder lines of credit. A lot of these programs, they do allow us to pay a little bit of something up front. There may be a couple that we can't do that, but almost all of them, they work on a draw basis. So you do some work, you request a draw, your work is inspected, then you get paid. You do more work, request a draw, your work is inspected, then you get paid. And that's just going to help you pay down your lines of credit if you're relying on those quicker, sooner rather than later. One huge benefit is that the homeowner cannot cancel the job. Now, I don't work with cash clients, so I don't know how often this happens, but I think I would be a little leery in some instances because I see people's finances. I see their bank statements. I see what they make. I see how they spend. I think I'd be a little leery if somebody couldn't produce proof that they've got cash to get this job done. But when they're financing the cost of the work into the mortgage, they must finish the job. They cannot cancel it. It has to be completed. It's a part of their note, their mortgage. So payment is going to be guaranteed to you as long as the job is done satisfactorily. Those funds are held in escrow. We're not giving this large check to the homeowner at closing. We hold those funds. We disperse those as work is being completed. That payment is protected and it's guaranteed as long as you're showing up and doing the job satisfactorily. And maybe the last benefit I could offer is that taking on these projects, I'm going to compare it to my origination career. When I first got started in mortgage origination, it was very, very tough to build a business. I could do a cookie cutter loan, and I could do it as quickly as possible with the best customer service available. And I still wouldn't get sometimes so much as a thank you for all the hard work I did at the end, right? I was a commodity. But when I started doing renovation loans, these are tough loans to do in the lending community. Not a lot of lenders offer them. They're rather difficult to find. These are complex loans to do. So the lending community doesn't freely offer them. You've got to find a lender who will allow it, who offers it. And a lot of lenders will shy away, or loan officers will shy away from doing these loans because they're a little harder than your traditional loans. I discovered that doing those harder loans, my clients were far more grateful. And that translated into more testimonials, more referrals. So I thought to myself, okay, I could do, a bunch of these cookie cutter loans. I'm not getting any referrals out of them. I'm busting my can to give them the greatest experience, the best customer service possible. And there's little reward except for the payday at the end. There are no residual benefits to this. Or I could take my time, I could do a renovation loan, and I could help somebody who's going to be so elated that they were able to purchase a property they couldn't otherwise have bought, and they're going to tell their family, friends, coworkers, I'm going to get more referrals. I found more satisfaction out of the latter, and so I offer to you that you may be able to do more business based on the fact that you're willing to take these projects on, and you could build relationships with the realtors who are involved, the inspectors who are involved, consultants who are involved, which can also lead to more referrals. There are some caveats. Nothing comes for free, right? Well, I mentioned a couple of hoops that we have to jump through. One of those is contractor credentialing or contractor approval. As lenders, we've got to vet your licensing and registration where that's required. We'll want to look at your liability coverage and your workers' compensation. We don't have any guidelines above and beyond the local municipality or the state. Whatever the local, county, state requirements are for licensing and registration, that's all we want to see. Whatever the state's requirements are for workers' compensation, that's all we're adhering to, nothing beyond that. If specialty certification is required, such as for lead-based paint, mold, asbestos, radon, we're going to want to see those certifications as well. To round that out, we'll ask for a W-9 form to be executed. I don't think that's asking for too much. Some lenders will ask for a credit or background check. Here at Diamond, we don't, but it's a possibility if you're working with another lender, so I'll float that out there. There are some bid requirements as well. I'm going to kind of water this down a little bit, but basically, we want to see a bid that's on official company letterhead with the homeowner's name and the property address where the work is going to be performed. I think that is just common sense and it goes without saying, but you'd be surprised how many bids we see that don't even meet that minimal criteria. We also want to see a full description of the work that's being performed. Think of it this way. If there's a disagreement between you and the homeowner, and a third party needs to come in to mediate. The bid has to explain enough that your average layperson can pick up that bid and understand the contract made between you and the homeowner. Tell us what kind of work is being done, which rooms are going to be impacted, what all it entails, what materials are going to be used. Now, I'm not asking for paint colors and the type of nails, and we don't need to get down to that level of detail, but tell us, we're remodeling a kitchen, we're doing flooring, cabinetry, countertops, paint, fixtures, etc. Tell us what you're doing. Or remodeling the hall bath or the half bath or the master bath. And this is what we're doing in the bathroom. We're replacing the tub and we're replacing the toilet and the vanity, etc., etc. So tell us as much as you can about the work that's being performed and how much you're charging. Now, the next ask is going to be a big one, and I admit it. I understand that a lot of budgeting software programs maybe can't or don't break down costs by labor and materials per line item, but a lot of lenders are going to want to see it. So I'm going to tell you, most lenders are going to ask for a bid that itemizes labor and materials per work item. I know a lot of contractors, they don't want to share that information necessarily, how much they're charging for labor. And I don't disagree. I'm with you guys on this one, but we have to adhere to the guidelines per Fannie Mae, Freddie Mac, HUD, USDA, VA. We got to do what they want us to do. We got to follow the parameters that they put into place, and whether we agree with it or not is what needs to be done. Lastly, we want you to identify any permits that are going to be required and the costs of those permits. Those are the main things that we're looking for when we're looking at a bid to make sure that it complies with the program guidelines. Maybe there are some lenders out there that have some additional guidelines on top of that, but really what we've just covered here should suffice. Now let's talk about the draw process and maybe even the timeline too. In fact, let's start with the timeline. It generally takes about 2 months for these loans to close, which I usually hear is perfectly fine with remodelers because they're usually booked out a few weeks anyway. So that seems to work well with the remodelers out there. Once that loan does close, permits need to be pulled right away and work should begin within 30 days. It should not cease for any 30 consecutive day period. And then it depends on the loan program how long you have to get the job done. So if it's a VA loan, you may have a very short window, maybe 4 months or less, depending on the lender. If it's another kind of Govy loan, you're probably looking at anywhere from 6 to 9 to 12 months, depending on what kind of government loan it is. If it's a conventional loan, you might be looking at 12 months to 15 months as far as the runway that you have to get the job completed. Each of these renovation loans, and there are many of them, they have their own draw process. So it's kind of hard to chat through what this looks like until we know what programs the homeowner qualifies for and which one they're going to use. But suffice it to say, the majority of them do allow us to give some money up front to you once the loan has closed. So we could do initial deposits on most of these. There are 1 or 2 where we don't have that flexibility, but instead what we could do is we could put a 50% deposit down on materials, and we would pay directly the supplier, manufacturer, vendor for those materials. Or if you pay for the materials in full, we can reimburse you for that out-of-pocket expense. But there are a couple programs that just don't allow us to do a mobilization deposit or initial deposit. So that's important for you to know. And make sure you're asking the homeowner or the lender, right? Talk directly with the lender and determine whether or not they can give you any money up front. Because I know that can make or break a deal for a lot of contractors. There are some that will split the bid 50-50, will give you 50% of your bid at closing and the rest of it when the job is done. There are others that work on that draw process where you might have 5 draws or maybe sometimes more than that you're allowed to take, and those draws are paid as work is being completed throughout the process. On those latter ones, the ones that have the draws, 5 or more, that are being paid over an extended period of time, a lot of times they will enforce a 10% holdback on all of those progress draws, but they're paying the final draw out in full along with the previously withheld holdbacks and any outstanding change orders, contingency requests that need to be paid as well. We're making you whole in that final draw. That pretty much covers the draw process. I would just maybe encourage you to, again, chat with the lender, make sure you understand it before you take this on and you know what you're getting paid and how you're getting paid. Maybe the one thing I could add to that is that a lot of lenders will do a dual party check made payable to you and the homeowner, but there are some like us who will do an ACH payment, or maybe there are others who will wire funds to you if we can get permission to do so from the homeowner for each draw. That might be another question you want to ask. Now that I've said that, I'm going to throw another one at you. We take about 5 business days or 5 to 7 calendar days to process a draw from the time it's requested to the time to the time that you get paid, that could be one extra question that you'd want to ask the lender. How long is it going to take for me to be reimbursed after I've requested a draw? There are all kinds of resources for you online. I'll refer you to my website, RENO-GAL.com. There is a section for contractors there that goes over a lot of the things that we talked about today. I'll encourage you to reach out. If you have any questions, you could drop me a message on the website, or I'd be happy to entertain any questions, comments, etc. As you can see, there are lots of benefits to expanding your business to include clients that are leveraging home equity to pay for their renovation projects. I hope I've convinced you to give it a shot. I don't mind saying that there are some lenders that are better at doing this than others. So if you have a poor experience with a lender, don't let it sour you. Find a lender that does good work, that does a lot of these, that has some experience behind them, and things should go very smoothly. If you're working with people, it's just like anything, right? There are some contractors out there that are not so great. There are some lenders out there that are not so great with renovation loans. So make sure you're working with somebody who's experienced, who has done this for a number of years. They've got their process down pat, and everything should go pretty smoothly. And of course, if you need me, you're welcome to reach out. You can reach me at 844-RENO-GAL.
Now the legalese required to appease attorneys, compliance officers, and regulators. This podcast is hosted by Jennifer Goldsby, NMLS number 591226, Vice President, Renovation Lending. The topics discussed herein reflect my personal opinion. They do not represent the opinions of Diamond Residential Mortgage Corporation and its management. Discussions about loan programs in this podcast are not a commitment to make a loan. Programs, approvals, rates, fees, and loan terms are subject to loan applications, credit risk, appraisal evaluation, underwriting guidelines, and other lending or qualification criteria and limitations, and are subject to change without notice. Not all products are available in all states. Not all borrowers will qualify. Diamond Residential Mortgage Corporation, 582 Oakwood Avenue, Lake Forest, Illinois, 60045, 847-244-9301. NMLS number 1, 86805. For licensing information, go to nmlsconsumeraccess.org/entity-details.aspx/company/186805. Equal housing opportunity. Diamond Residential Mortgage Corporation is not affiliated with or acting on behalf of or at the direction of FHA, VA, USDA, Fannie Mae, Freddie Mac, or any governmental body or agency.